Welcome to Financial Insights in Minutes, where we summarize the day's top financial news videos. Today, we're diving into critical issues surrounding the housing market and economy. Is the housing market on the edge of a crash? We'll break down trends from rising concerns over investor behavior to stark economic predictions.
Don't miss expert analysis from multiple perspectives, including predictions on the stock market and cryptocurrency.
Stick around until the end, where we will summarize agreements and debates among our guests.
Let's start with today's first video exploring Blackstone's property liquidation news.
First, we explore Blackstone's alarming divestment from Florida properties. Next, Schiff sheds light on an impending economic collapse. Then, Zillow surprises the market with bold home value predictions. Ken McElroy shares key lessons from his billion-dollar company journey. Finally, Tom LaSalvia reveals emerging multifamily real estate opportunities. Welcome to Reventure Consulting's YouTube channel. Today, we're diving into the shocking news of Blackstone liquidating properties in Florida. What does this mean for our real estate market?
That's right. Nick Gurley's insights today reveal crucial information about institutional investors and their impact on housing prices. Buckle up for some eye-opening stats and predictions.
So what's the core thesis here?
Nick points out that Blackstone's recent sales, including significant losses, indicate a concerning trend for the housing market. If major investors are divesting, it suggests home prices may be headed downward.
What's the first key point about this situation?
Blackstone sold a St. Petersburg home for $110,000 less than they purchased it 2 years ago. It's been sitting unsold for 170 days, signaling a shift in demand.
And what about overall investor ownership?
A staggering 27 million homes are investor-owned. Yet Wall Street players like Blackstone only control 1 to 2% of that. The rest, mom-and-pop investors, are still the main players.
What's the market reaction to these investor trends?
Inventory levels in St. Petersburg have skyrocketed from 30 to 170 homes. Florida prices are reported as being 30 to 60% overvalued compared to long-term norms.
Any predictions on price movements coming up?
Nick suggests that as inventories increase and professional investors exit, we could face a significant decline in housing prices, especially in overvalued areas.
What about mom-and-pop investors? What's Nick forecasting?
As corporate investors lead the charge, amateur investors may panic and begin selling too, adding to market volatility.
To wrap up, what are the final takeaways today?
Nick warns that Blackstone's liquidation signals a significant shift in the housing market, emphasizing a potential price drop as inventories rise and investor confidence wanes. Keep your eyes peeled for what's next.
What does this all mean for potential homebuyers?
With investors possibly panicking, now might be the moment to closely watch market conditions and make informed decisions.
Welcome back to Sachs Realty's YouTube channel. Today, we're diving deep into the tumultuous predictions about the U.S. economy with none other than the sharp-witted Schiff. Buckle up as we explore the impending economic collapse.
Absolutely. Peter has made waves with his perspectives on the economy for years, being the CEO of Euro-Pacific Capital. Let's prepare to examine the cracks in our financial system, folks.
Let's break down Schiff's core thesis. What's the big takeaway?
Peter firmly believes that an economic collapse is on the horizon, exacerbated by governmental interference. He argues, just because a crash hasn't occurred yet doesn't mean we're in the clear.
Can you delve into those key points about government intervention?
Yes, Peter emphasizes that past government actions have only delayed the inevitable economic fallout. Instead of fixing, the Fed's money printing may lead to the dollar crashing in value.
And what about the stock market and banking sector? Any insights?
Peter warns that the stock market could always crash, but the bigger concern lies in the banking system's precarious state. It's closer to insolvency than many realize.
Cybersecurity was also mentioned. Any thoughts there?
Absolutely. Schiff highlights the recent cyber glitches as a wake-up call to how vulnerable our systems can be. Increased reliance on tech is like walking on a tightrope.
What role does financial education play, according to Peter?
Schiff stresses that individuals must educate themselves about economics. Being financially literate is essential for navigating the chaos that might ensue.
What does Peter foresee for the stock market's future?
He predicts a drastic decline, potentially plummeting by up to 90% in terms of real estate value. Buckle up, it's going to be a wild ride.
And what about the dollar?
Schiff warns that ongoing inflationary pressures might obliterate the dollar's value, making it a primary concern for everyone. Wealth preservation is essential.
To wrap it up, what are the key takeaways from Peter's insights?
Peter urges us all to be proactive about finances and prepare for potential economic upheavals. Whether you believe Peter or not, knowledge is power. Let's stay vigilant and informed.
Hey everyone, welcome back to the channel. Today's topic is a big one. Zillow has just done a total U-turn on its housing predictions.
That's right. Jason Walter is here to unpack how Zillow now believes home sales and values are expected to rise. Quite a turnaround.
So what's the crux of this forecast? What's got Zillow singing a new tune?
Zillow's new forecast indicates home sales will rise this year, with values climbing 2% in 2023, dramatically shifting from their previous outlook of a decline. They now anticipate a modest increase through 2025.
What are the key takeaways in terms of home values?
Zillow forecast home values to rise by 2% this year and adjusted their forecast for a 1% increase by mid-2025, showcasing a more optimistic outlook.
And what about home sales numbers?
Zillow is forecasting 4.2 million existing home sales this year, showing a slight 2.3% increase from 2022, but it's still down significantly from the 15-year high in 2021.
Interesting. Are there any seasonal trends to consider?
Definitely. Home values typically rise in spring and peak in summer, aligning with buyer demand, but experience a decline later, creating a cyclical effect.
Got any predictions on what might impact these forecasts?
Zillow suggests increased inventory might lead to a more favorable buyer's market. If supply outstrips demand, we could see further reductions in home prices.
Any regional differences we should be aware of?
Absolutely. While some areas may see growth, others like San Francisco are projected to decrease by up to 3.3% year over year. It's all about local market dynamics.
So, in conclusion, what should we take away from Zillow's latest forecast?
Zillow's upward revision indicates a changing market, where home sales and values may surprise us. It's crucial for buyers and sellers to stay informed about local trends to navigate this evolving landscape.
What can home buyers and sellers do?
Being aware of these forecasts can empower buyers. With more inventory and possibly lower prices, it's a good moment to strategize.
Welcome to the channel. Today we're diving into some serious business wisdom. How did Ken McElroy transform his $3 billion company?
Ken takes us through a brutally honest review of his company's operations and shares key steps toward efficiency. You won't want to miss these valuable insights.
What's the core thesis here? How did Ken elevate his company from a C average to a B+?
The main takeaway is that Ken's brutally honest review of each department led to strategic changes and significant improvement in overall performance.
Let's talk about that evaluation process. How did they start?
They graded every department from A to F, identifying strengths and weaknesses, like their HR department, which had a grade of C due to high turnover.
The magic of software. What did Ken do next?
He centralized their systems onto one platform. This led to better communication and eliminated the confusion caused by over 50 different software tools.
Customer care is king. How did Ken enhance that?
Ken created apps that allowed tenants to communicate directly with maintenance, reinforcing customer satisfaction and retention, crucial for cash flow.
And when it came to team structure?
They optimized team leadership by limiting direct reports and recruited exceptional talent with performance incentives. Efficiency was the name of the game.
What predictions did Ken make for the company moving forward?
With high occupancy and robust systems, Ken believes he and his partner can step back while the next generation takes over seamlessly.
To wrap this up, what's the takeaway for aspiring entrepreneurs?
Ken stresses the importance of brutally honest evaluations, adopting modern technologies, and prioritizing customer satisfaction for any company's success.
Any final words from Ken on keeping a business innovative?
Absolutely. He believes businesses must constantly adapt their systems and embrace new technology to thrive. Wise words for all.
Welcome to BiggerPockets. Today, we're diving into the fascinating world of multifamily real estate and its implications for investors. Joining us is the savvy Tom LaSalvia, head of commercial real estate economics at Moody's Analytics. Let's uncover the opportunities and trends he's seeing in the market.
Absolutely. Tom's insights are invaluable, especially with his extensive expertise analyzing multifamily trends. This segment is packed with information for both seasoned investors and those new to the game, so buckle up.
What's the main thesis from Tom LaSalvia's insights? What should investors be paying attention to?
The core thesis is that the multifamily market is experiencing a shift due to a surge in supply and evolving demand dynamics, impacting affordability and investment opportunities. Tom emphasizes that understanding these trends is crucial for making informed investment decisions.
Let's break down some key points. First off, what are the current market trends, particularly around multifamily properties?
Tom highlights that A-class apartments are on the rise, but many tenants are feeling trapped in multifamily housing due to high single-family home prices. This dynamic boosts our long-running demand.
And what about supply and its effects on rent growth?
There's been substantial supply growth in multifamily, contributing to subtle rent declines in 2023. However, projections indicate a return to mild rent growth in 2024 as balance begins to restore.
Interesting. How are current economic conditions shaping the multifamily landscape?
Tom explains that high interest rates are squeezing affordability, leading to pressures on both the rental and homeowner markets. This sluggish economy is creating challenges for renters as well.
What investment opportunities should we keep an eye on then?
Tom points out that while some trendy markets face oversupply, opportunities are emerging in previously overlooked Midwest markets. Also, tracking loan maturities can reveal potential distress in the multifamily sector.
Now let's talk predictions. What should investors anticipate moving forward?
Tom predicts that while rent growth might be sluggish now, mild growth is expected as supply stabilizes and long-term demand for multifamily remains robust.
To wrap it up, what are the key takeaways from this discussion?
Understanding the current multifamily dynamics, including supply, demand shifts, and economic pressures, is essential for investors navigating this sector. It's all about adapting strategies to seize opportunities.
Any final thoughts on action steps for our audience?
Absolutely. Investors should zero in on emerging markets and track key indicators like loan maturities to uncover lucrative opportunities in multifamily real estate.
Today, we've uncovered a variety of opinions regarding the housing market.
Nick Gurley sees Blackstone's actions as a harbinger of price declines, while Peter Schiff warns of a broad economic collapse.
In contrast, Zillow's forecast suggests a surprising resilience in home values.
Despite these disparities, all experts agree that rising inventory and affordability are significant concerns.
Engagement with these diverging views can help investors navigate potential changes in the market. Thanks for joining us. Thanks for watching Financial Insights in Minutes for July 28th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.